in Europe, buying a 10-year bond at a negative yield because you think it's going to become more negative, you're not investing. At that point, you're not an investor in fixed income. What you really are is a speculator looking for a capital gain. I mean, bonds are supposed to be bought for safety and for income. When you're buying a bond that has no income and actually has negative income, and only because you think its price is going to go up and you're going to make a capital gain, you're not even a fixed income investor. You're a speculator. You're looking for a capital gain, and capital gains is not what bonds are all about. I mean, and even in pension formulas, those are supposed to be for safety and income. Well, when they've got negative yields, there's no safety and there's no income. So there you go. It's ridiculous, but that's what our world has morphed into. And why are we in that position? Well, we're in that position because governments have overspent and issued too much debt. And governments have been forced into a position where the only way they can manage their debt is to have rates at zero. And, rates at zero is not a sustainable thing in the long term. Absolutely not. I mean, the Fed and the U.S. Treasury are like Siamese twins because in effect, what's occurred in America is there's been a financial coup. The political coup they're trying to execute right now, which is basically the ouster of President Trump, but the financial coup has occurred years and years ago. And people shouldn't be surprised that a political coup would follow after a financial coup, because the deep state or the globalists, they've had control of the financial levers in America now for many years. And now they're trying to finish the job and take over the executive branch as well. There's enough out there now, right now, to have it collapse completely. But you see, the people that are in control, I do believe that many of them are quite concerned about literally pulling the pin on the grenade, because what ensues if you don't have your ducks lined up, what ensues could very well be anarchy, and nobody benefits from anarchy. So, my personal belief is that Donald Trump is well aware that the situation is unmanageable in the long term, and what he's doing is cheerleading on in the wheelhouse of the Titanic. He's trying to put lipstick on the biggest pig on the planet. And the reason he's doing that is because allowing things to devolve into a state of anarchy is going to be a very, very, I would even hazard to guess, a very bloody affair. Personally, I believe America will have either a revolution or a civil war. I don't think Canada's going to have a civil war. I actually believe that Canada could end up being a recipient of hordes of migrants, Americans, trying to flee being shot in the street in America. I think this is in the cards, and I can envision a day when a civil war in America would force Canada to close its border with America, because we simply can't take in the number of people that are going to be trying to make it to here.
Welcome back, Reluctant Preppers and Finance and Liberty viewers. We are with Rob Kirby, proprietary analyst and founder of KirbyAnalytics.com. Rob, thanks for joining us again, this time on Reluctant Preppers and Finance and Liberty.
Yeah, pleasure to be with you again, Dunnigan.
We were just talking about the challenging times that we're in financially. We started out by just making small talk about how you doing, and realizing that these are really tough times financially for people to make heads or tails out of which way the world is going. And it becomes grinding on us emotionally and morally as well, because it's like we're trying to keep our spirits up, but there's something very disempowering about feeling that your efforts don't matter, your intelligence doesn't matter, your observation of what's happening out there and making prudent decisions and judgment calls about it doesn't matter. It's that sense of, it's almost like you hear about people living in the Soviet or communist countries where it's like, it doesn't matter how hard I work or whatever I try, it's not going to change anything. So can you talk to us about what you said you've been talking with a lot of people in different, being affected by this. How does these unreal situations, and it hasn't always been this way. That's where you started telling me it hasn't always been this way.
No, I'm compared. What we started talking about pre-interview is I was making the comment that, like, I grew up. My first job coming out of university was in institutional capital markets, and that was the early 1980s. And I would suggest to everybody listening, in the early 1980s and up until the early 90s at least, we had free markets. I know what free markets look like. I worked on an institutional trading desk in 1987 when we had a stock market crash, and it was a scary, scary situation. But let me tell you that since that time, markets have changed forever. And that was the changes that were brought in the wake of the stock market crash in October of 1987. It was the establishment of the President's Working Group on Financial Markets, aka the Plunge Protection Team, that was set up by Ronald Reagan in the late 1980s. And what that was all about was basically to have a body with all the key players, whether it was the head of the SEC, the head of the CFTC, and before I throw too many dazzling acronyms, the SEC is the Securities and Exchange Commission. The CFTC is the Commodities Futures Trading Commission. These are regulatory or let's just say oversight bodies that supposedly protect the little guy in the equity markets and in the commodities markets. And basically, they're the referees. And these are the people that we've entrusted to make sure that our markets, or supposedly make sure our markets, are free and fair. Well, let me tell you something. I know what free and fair markets look like because I worked in them when they were free and fair. And the markets today bear no resemblance whatsoever to the markets that I knew in the 1980s. And what we have now is a mishmash of counterintuitive events that unfold at lightning pace, and a lot of that's got to do with, no doubt, the fact that we have instantaneous or computer-driven trades, but it's the whole field. I mean, the cause, ostensibly the cause of the 1987 market crash, Dunnigan, was computer trading. And you see, what had happened was in 1987, why the stock market crashed is because people purchased what was referred to then as portfolio insurance. And what portfolio insurance was all about was that if you were long equities, if the market declined by a given percentage, the computers would click in automatically and start selling your position out, in theory, to limit your loss. You owned equity, it went down in value, it reaches a critical level, it's called a stop loss. So the computer clicks in and starts liquidating your position. But the underlying assumptions in portfolio insurance in the day, of course, was the people who wrote the programs, they made the assumption that there would always be a bid. And the reality is that when markets become very dislocated, you can go offered with no bid. And what happens is the computers then ensure that the market does what you hoped it wouldn't do, because it begins selling your equity into an abyss. When it just says sell and there's no bid, it will literally hit a bid at zero. And, the idea of insuring your portfolio certainly isn't to liquidate it at zero. But that was the underlying flaw in portfolio insurance. And I can tell people, just, for edification, it was in the summer of 1987. So this was like August of 87, a few months before the October stock market crash. And I was having lunch with some chaps from Citibank Toronto, who were the creators of the interest rate derivatives that we all know that there's so many trillions of in existence today. And one of the architects of these things at lunch, he blurted out to 3 or 4 of us that were at the table. He said, "I can see a day when stock market goes down many hundreds of points." And that came certainly as news to us sitting at the table at the time, because at the time the Dow Jones was at 2,000. And, it seemed to go up at that time, and it seemed to go up 50 points every day, whether it needed to or not. And there was no rationale or reason really given to it other than it was just going up. The NASDAQ was doing much the same thing. So to have someone tell us that he can see a day when the stock market would decline many hundreds of points really caught us off guard. And we looked at him and said, why is it you believe that? He said, I don't believe it. It's a guarantee that it will happen. And we said, well, why is it a guarantee that will happen? He said, because of portfolio insurance. And we said to him, well, if you can say that the market could go down many hundreds of points in a day, what makes you think that the market couldn't go up many hundreds of points in one day instead? He said, well, I've modeled it in my computer. And he said, the underlying assumptions in portfolio insurance are wrong. And he said, I know how all the people, because he was a computer junkie himself, he was a PhD, brilliant guy. And he just said, and so we said, so by the same rationale, can things go up 300 or 400 points in a day as well as they can go down that much? He said, no, things never crash up. So there you go. But anyway, it was amazing because very prophetic words. It was only 2 or 3 months after that, from August till October, that we saw the market fall out of bed on that Black Monday, and very, very amazing the way the market behaved. But since that time, I can assure you, markets have never behaved the same since, particularly since the establishment of the Plunge Protection Team, or the President's Working Group on Financial Markets. So the world is a changed place, and now people seem to have people that used to be able to make money using fundamental analysis seem to be able to make money. I knew people that made money every year and had runs of literally 15 to 20 years where they made money every year. And in the last sort of 6 or 7 years, it's become very difficult for these people with remarkable track records. It's become, I know because I speak with a number of them, it's become very difficult to make money the way they used to. And they basically have stated emphatically to me, the markets are behaving much different today than they ever have. And I see that in spades everywhere I look.
That phenomenon that you're describing, you talked about how it takes the wind out of our sails. If you've been taught how to deal with reality and gain a competence and gain an ability to act and to make good decisions and make things happen and actually benefit, profit, create abundance from that, and suddenly those rules don't apply. The game has changed. Now all your skills are worth nothing. It's like we're left demoralized and dumbfounded. It's like it can be quite knocking the wind out of people's sails, and it can happen. You mentioned it happened to large brokers who are in charge of, or people who are money managers. But I'm looking at it on the individual level as well. Ordinary heads of families who are trying to make the right decisions about what to do financially for their family are just paralyzed. I mean, my own father-in-law asked me flat out a couple of times in the past decade, what do I do? He says, I've got a ladder of CDs and they're down to 1%. I can't make any money there, and I don't want to put it in the stock market because I don't trust it because things are so weird there. And so isn't that something that's affecting all of us?
Well, listen, Dunnigan, put, like, let's just say pension funds, insurance companies, many of them are mandated, literally in their articles of, incorporation or their mission statements by edict. For instance, many pension funds have to have like a minimum of 40% of their assets invested in what's referred to as the highest grade, or let's just say sovereign debt. And I mean, so what do we have in the spectrum? Like, and so like, think about this way. If you're a pension fund, and if you have $100 billion that you have to invest to guarantee the livelihood of people after they retire in your workforce, and if you have $100 billion in assets, if you have to have $40 billion of that 100 invested in fixed income, many of these platforms have built-in assumptions as to, because they've modeled years ago when these things were set up, they modeled what kind of return they were going to need to meet the challenges of doing good for people in their pensions going forward, like, as to like when they retire. And like most people because I know people in the pension universe, most of the pension funds, they've built in or modeled for a return of a minimum of 500 basis points or 5% on their fixed income portfolios. So when you think about that, and you think about, if they have to have 40 billion invested where they've budgeted for it to make 5%, and instead it's making 1%, or in the case of many European funds, all of the euro-denominated debt is all trading at negative yield. Well, you've got yourself into a big hole at the beginning of every year, because 40 billion bucks worth that you have budgeted for it to earn 5% is yielding, let's just say, nothing. So now you've got 60 billion that you can put into equity. And so what are you going to do now? That 60 billion that you're going to invest in equity, it's going to have to work extra hard. And when money has to work extra hard, it means that the person doing the investing has to, generally speaking, move down the risk curve or out the risk curve and take much bigger risk with the 60 billion of the 100 that they can put into these riskier things. And what that does then is it means that they're basically walking through a minefield, because they're investing in things that are much riskier and much more prone to blow up. So you see, this puts an enormous stress on not only private pension funds and insurance companies who have these kind of investment mandates, it also puts enormous stress on the government unfunded liabilities themselves, because you see, governments don't fund their pension or their retirement plans. And the government's the biggest employer in every country in the world, and if government unfunded liabilities become bigger and bigger problems going forward, the longer we have interest rates at these ridiculous manufactured levels. So this is an issue, and of course it gets little to no airplay in the mainstream financial press, because that's not the story that the globalist community wants put forward. I mean, the story that they want everyone to buy into and to believe, it's literally drink the Kool-Aid. Everybody drink your purple Kool-Aid and buy some Amazon stock, buy some Tesla, buy some Facebook. Do any of these companies make money? Some of them do. I mean, like, for all the good that Amazon has done in the world, and I've shopped with Amazon myself, but for all the good they've done in the year, who have they put out of business? They've put out of business basically every mom and pop department store or corner store or specialty store. For the most part, like retail in America is a shadow of what it used to be. What it's done to corporate real estate is it's in shambles. Because many strip malls that used to house the J.C. Penney's and the Kmart's and these places are now standing vacant, and with tumbleweeds blowing through their parking lots. It's become a much more challenging universe than it used to be, and things aren't the same, and many markets behave in an extremely counterintuitive fashion, and there I would highlight in particular I would highlight the bond market itself. I would highlight the precious metals arena, and I would highlight in many cases the currency markets as well. So the markets today are not the markets of 30 years ago, when I'm going to say they were quasi-free, or for the most part free. Different world.
Yeah, we've always been told there was not a level playing field. The people who were the cronies or who had the market makers knew what the bids were, and they could always play some hijinks to get better results than anybody else. But now, if even the money managers and the ordinary individuals and the pension fund managers are all feeling stymied by how to proceed, and it's forcing everybody into just reckless risk behavior, or completely opting out.
Well, I mean, if your mandate is to manage an investment pool, it's really hard to opt out. It's very difficult to opt out. So, and especially if you're managing a lot of money and you're mandated to have a certain percentage of it in fixed income. I mean, it's like giving an Olympic swimmer a ball and a chain around his neck and telling him to go out and swim a record time. It's really difficult. And let me tell you, if you're managing a big pile of money and you must have a certain amount of it invested in fixed income, that is a huge ball and chain around your neck. And it's not easy. And I mean, unless of course you're trading, if your whole mantra is you're going to just trade the daylights out of everything and try to pick up every little squiggly move in the ups and downs, because while interest rates are generally low, there is movement in the bond market. But I mean, trying to trade the squiggles in the bond market on a consistent basis, to me, is another recipe for a disaster, because that again, it's like walking through a minefield.
Yeah, I mean, right before the 2000 collapse or the 2008 collapse, the phenomenon of people who had been so-called, well, first of all, they weren't investors. Then they became investors because the market was going up. Then they became swing traders. Then they became finally day traders. What you're talking about is basically forcing people who are supposed to be. Yeah.
And I'm going to state it a different way. In Europe, buying a 10-year bond at a negative yield because you think it's going to become more negative, you're not investing. At that point, you're not an investor in fixed income. What you really are is a speculator looking for a capital gain. I mean, bonds are supposed to be bought for safety and for income. When you're buying a bond that has no income and actually has negative income, and only because you think its price is gonna go up and you're gonna make a capital gain, you're not even a fixed income investor. You're a speculator. You're looking for a capital gain. And capital gains is not what bonds are all about. I mean, and even in pension formulas, those are supposed to be for safety and income. Well, when they've got negative yields, there's no safety and there's no income. So there you go. It's ridiculous, but that's what our world has morphed into. And why are we in that position? Well, we're in that position because governments have overspent and issued too much debt. And governments have been forced into a position where the only way they can manage their debt is to have rates at zero. And, rates at zero is not a sustainable thing in the long term. Absolutely not.
What you talked about a few minutes ago about conservative funds or funds with supposedly have guidance that they're supposed to be money market equivalents, that kind of thing. People have heard me mention this before. Our family, after being burnt in a couple of major setbacks when markets collapsed in the 2008, we finally said, okay, that's it. We're not going to let that happen again. We're going to go into money market equivalent, cash equivalent funds, and that's when, after the 2008 collapse, we did that prior. We did that like 2006, and when 2008 happened, and then we got the call from our brokerage firm, major brokerage firm, saying you're not going to have access to your funds until further notice. And we said, well, it's 1 day access money market equivalent. They said, well, actually that fund on the backside was invested into Lehman Brothers. Lehman Brothers is down, so you're not going to have access to your funds. And so when people think, even the ordinary individual on the street thinks that they're putting their money into the safest possible place they can in the system, they have no idea, no visibility, and no control over what radical, risky hijinks are being played on the backside.
Look at it this way, Dunnigan. Growing up, it was always preached to me that bonds were the safest thing you could ever invest.
They still have those when you're in your employee, and here's your 401k. And so you can pick this model or that model or that model depending what decade of your life you're in. And they absolutely guide you from small company and international stocks into bigger stocks, and finally into bonds, more and more bonds. The older you get, thinking this, now you're coasting in. You're on your glide path now to retirement.
Sure, and of course they sell you on the notion that buying bonds in an insolvent entity is the ultimate in safety. Because many of these governments are insolvent, and I mean, listen. If you want to think about a paradoxical oxymoron. A 10-year Greek bond has a negative yield, while the 10-year American government bond is yielding, what is it, 175, I think it's 175 or thereabouts. So, I mean, the Greek government was insolvent 4 or 5 years ago and was acknowledged around the world to be insolvent. I don't really believe their finances are much better today. But, yet their 10-year bonds are yielding negative, and the U.S. government, it makes you wonder which government is more insolvent. The Greek government, because they're enjoying negative yields. Well, America has to pay 1.75 to
get people to buy their bonds.
And it seems that people don't really want to hold them because, it seems to me that America's got a big problem right now, as evidenced by the amount of repos that are being done by the Federal Reserve.
Exactly. I was going to ask you this question from PGG that says the banks are selling U.S. bonds to the Fed and mortgages. I'm just wondering, what if the banks knew the U.S. is going to default on their bonds and they don't want to be holding the bag? Am I way off on this possibility?
No, listen. You see, the banks and the dealers, they hold a lot of inventory in U.S. government debt. And what happens is, for them to continue, they have a lot of their own capital tied up in effectively inventorying all this U.S. government debt. And what happens is when banks need their capital to be liquid and need to be agile to respond to changing market conditions and opportunities. And what happens is when you have a lot of your capital tied up in something that when you go to try and sell it, there's no buyer, you become very restricted with responding to market opportunities as they arise, because if you can't readily liquidate or sell to respond to a new your inventory to respond to a new opportunity, you got big problems. And that's really why the Fed has had to step in and provide the liquidity, because banks can't move their inventory. That's why the repo is there. That's why the Fed is conducting repos, because the liquidity. And you see, and this is another counter or not an intuitive thing. You see, we're preached to that the dollar is the strongest currency in the world. which of course I guess technically on a piece of paper they make it look like it's the strongest in the world, but banks are having trouble moving their inventories. And if banks are having trouble moving their inventories, to me it would mean that interest rates should be going up. Well, as it turns out, if banks are having trouble moving their inventories, it seems to me that rates should be backing up, which they're not, because the Fed has effectively mandated that they're going to go down again. And the dollar should be getting weaker because there's no takers of their debt, and yet the dollar remains heavily bid. And here I got to bring in that nasty thing again. A big part of the reason why these counterintuitive things can happen is because the powers that be have stolen or misallocated or ripped the system off to the tune of $21 trillion worth of dark money. And this is the dark money that's been documented by Catherine Austin Fitts and Dr. Mark Skidmore of Michigan State University. They have a pool of dark money that they have at their disposal, which they can intervene in U.S. government bond auctions to ensure that bond auctions do not fail, and to make the dollar continue to appear strong. The dollar is not strong. If the dollar was truly strong, foreigners would be selling their oil for dollars. Foreigners will not sell their oil for dollars anymore. They want to sell it in other than dollars because they're full on dollars. And the debt that the dealers are stuck with in their inventories, they have it because there are no buyers of it. And that's when the Fed is called up, the Fed, or let's just say people that look like the Fed. Because you see, the way it works, done again, when the Exchange Stabilization Fund, which I have long maintained is where this 21 trillion or much of it is warehoused, these dark money, when the Fed intervenes in the market, particularly when they intervene for the Exchange Stabilization Fund. The Exchange Stabilization Fund does not intervene in the market directly in its own name. It intervenes through the New York Federal Reserve Trading Desk. So the Fed may very well be buying bonds from the banking community, but they're buying it and putting it in an account that's owned by the Exchange Stabilization Fund, I would argue, in many cases. So it's really, when people talk about the power of the Fed, the Fed and the U.S. Treasury are like Siamese twins, because in effect what's occurred in America is there's been a financial coup. The political coup they're trying to execute right now, which is basically the ouster of President Trump, but the financial coup has occurred years and years ago. And people shouldn't be surprised that a political coup would follow after a financial coup, because the deep state or the globalists, they've had control of the financial levers in America now for many years. And now they're trying to finish the job and take over the executive branch as well. So, these things follow each other like night follows day. And nobody should be surprised that there's a political coup underway to displace the president. It's amazing how these things meld together, and how you can just literally slide from one of these topics into the next, because they're all interconnected, and they all basically point to the reality that we're living in a very dystopic world, and the world that we're living in is not the world that me at my age, that I grew up in. Things have changed remarkably, and I would argue for the worse.
On the heels of the initiation of the Fed's bond repo actions, which started about a month ago to the tune of supposedly $75 billion a night, and then just this week they announced an increase to $100 billion. There's a question that several of our viewers have asked. Jacques Bourne says, is the Federal Reserve's repo operation lending out and being repaid the same $75 billion day after day, or is there something more going on? I've heard some describe this as another QE, but I don't understand how it can be a QE if the same lump of money is just being handed back and forth.
Well, it's my understanding the Fed's engaged in two different operations concurrently. They're running a short-term repo operation where they'll buy securities from dealers or banks today with the agreement that the deal gets reversed the next day. Like that would be an overnight repo. So if you're long securities but don't have cash, you'll sell me your securities for cash today, so you have cash overnight. But then tomorrow you'll buy them back with the cash that I advanced to you today. Tomorrow you'll buy the securities back, and the securities are still yours. So that's called a temporary open market operation or a repo. Temporary open market operation is referred to as TOMO, TOMO, temporary open market operation. But at the same time, they're also engaged in operations referred to as POMO, permanent open market operations, where the Fed is going into the market. I believe it's on a monthly basis, and they're outright buying bills for cash from holders of T-bills, and that trade isn't being reversed. So any way you look at it, to me, it's the manifestation and symptomatic of dollar rejection. It tells me that there's too much U.S. debt for the world to absorb, and it seems to me, based on the numbers involved, this is accelerating, and it's becoming more acute as time goes along. The dollar is being rejected around the world, and a lot of it is centered on oil, because the macro vacuum cleaner of U.S. dollars in the system, or the demand for dollars in exchange, much of it comes from the oil. When foreigners sell oil, millions of barrels a day, and when they sell them for dollars, it increases the demand for transaction in dollars. But when countries around the world, like places like Iran, Iraq, Libya, Russia, Syria, when they want to sell their oil for other than dollars, it creates problems in the dollar arena. Now, if there's anyone listening who maybe understands who America's enemies are all purported to be, it's all the countries that are selling oil for other than dollars. I could throw Venezuela in there as well. So all the countries that America has a problem with are all the countries that have a penchant to sell their oil for other than dollars, because it's the oil trade that underpins the U.S. dollar. Because when America went off the gold standard in August 1971, it was the petrodollar that became the new, let's just say, the new backer of the dollar. And when the big oil producing countries stop selling their oil for dollars, it's called rejection. That's called rejection of the dollar. And that's when you start having problems, when people talk about there being a dearth of dollars. Well, I guess maybe to a point you could argue there's a bit of a dearth of dollars. Like if I used to sell 4 million barrels of oil a day in dollars, and now I'm selling them for euros, I guess you could say I don't have as many dollars as I used to have. But I don't give a damn, because I've got euros and I'm buying stuff that I used to buy in dollars. I'm buying it now from Europe or from China in euros instead of dollars. But the losers are the people who've issued all the debt, because the demand for dollars in the world has decreased, but the amount of U.S. debt in the world hasn't decreased, and it keeps going up. So who's going to buy that debt? I don't want American dollars anymore. I want euros. I want something else. Or maybe I even really want gold. But nobody talks too loudly about that because that'll get you a visit from the U.S. military.
This is a related question, and you've covered most of this, but just to put a capstone on it, Larry IK1211 asks, then the New York Fed changed their repo verbiage to, quote, at least $75 billion per night. Now they offer 14-day, quote, term repos, all being oversubscribed. Do you think financial Armageddon and the crash of the dollar, the entire system, is here? Or do you think it can survive till the next U.S. election, which seems like a long, long way off?
I'm going to answer that question by saying the outcome is absolutely assured, okay? And it's not a good ending. So the dollar will lose its position as the world's reserve currency. That is a guarantee. But when you're asking me when that will happen, I'm gonna reply with, when will a child lose belief that Santa Claus exists? I mean, we can all say kids will lose the belief that Santa Claus exists. Some lose that belief at an earlier age than others. But let's just say what is going on and what's occurring in our global capital markets today is dystopic, and it's unbelievable, and it's how long do people want to live the dream? Because there's enough out there now, right now, to have it collapse completely. But you see, the people that are in control, I do believe that many of them are quite concerned about literally pulling the pin on the grenade, because what ensues if you don't have your ducks lined up, what ensues could very well be anarchy, and nobody benefits from anarchy. So, my personal belief is that Donald Trump is well aware that the situation is unmanageable in the long term, and what he's doing is cheerleading on in the wheelhouse of the Titanic. He's trying to put lipstick on the biggest pig on the planet. And the reason he's doing that is because allowing things to devolve into a state of anarchy is going to be a very, very, I would even hazard to guess, a very bloody affair. So, cheerlead, and that's why we have the chief cheerleader in state. Not a pretty story.
No,
and it doesn't have a good ending.
Related to that, there's a couple of questions here that I think are pretty closely tied to that. I'll ask both of them together, two from two different questioners. Nano Russian Bot asks, if we are reaching the edge of the next financial crisis, which regions of the world or countries are best positioned to benefit long-term, or at least to suffer less? And the related one from Bert Trim is, how will Canada fare when this all goes down? I guess we'll be equally screwed in the same melting pot as the U.S. since our banking system is owned by the same people. Dang, I think we might need to build a wall.
Wow.
Okay, so let's take those together or one at a time. If we're reaching the edge of the next financial crisis, which regions of the world or countries are best placed to benefit long-term or at least suffer less?
Well, I'll speak from the standpoint. I live in Canada, and the traditions in Canada are somewhat different than America. And a lot of people say that Canada is just like America, and in many respects, maybe we are. But Canadians don't all own guns. And so if things devolve into a state of anarchy, Canada will have dramatically less anarchy, I believe, than America. I think America is going to, personally, I believe America will have either a revolution or a civil war. I don't think Canada's going to have a civil war. I actually believe that Canada could end up being a recipient of hordes of migrants, Americans, trying to flee being shot in the street in America. I think this is in the cards. And I can envision a day when a civil war in America would force Canada to close its border with America, because we simply can't take in the number of people that are going to be trying to make it to here. I believe that can happen. I hope it doesn't happen, but I believe that can happen. And I believe it's likely, because I frankly believe that President Trump is going to be impeached. And I think that there will be open rebellion in America when that occurs, because that will mean if and when Trump gets impeached, I suspect that Pence will be impeached with him. And I think that will mean that it implies, to me at least, that the Democrats, as in Pelosi becomes then the president, and she will immediately appoint Hillary Clinton as her vice president, and then she will likely resign. And where does that leave us? Not a pretty picture. And this is becoming more likely by the day in my books. So, and I don't want people saying that I'm crap talking America. I'm not. I hope and pray I'm wrong, but I fear I'm right. So, and this looks to me like a very probable outcome right now. So where else would I want to be? I mean, if I have a choice, Canada or US, I'll take Canada. I might more prefer New Zealand. I don't want to be anywhere in Europe. I don't really want to be anywhere in Asia so much. You know, New Zealand seems probably like a nice place to be. Possibly Australia. South America, I think, is a mess right now. I wouldn't want to be there. And so, I mean, you know, I guess really the thing is, you know, and there'll be parts of America that'll be safe too, but they're going to be likely more remote places that are sparsely populated. And I think people are going to need to hunker down. People are going to need to hunker down, and the worst places. My guess would be that the worst places to be would be the big blue Democrat cities in America. So San Fran, Chicago, New York. You know, these places, in my view, are going to be living is going to be torturous in many of these centers. Anyway, that's just what I think is coming. And believe it or not, Dunnigan, I have felt this way for years, and you know, and now, in my view, it's all coming to be. It's very clear that this is the path that we're being pushed along. So, anyway, interesting times to say the least.
In the face of this disempowering, dystopic dynamics that you're describing, Jim Jones asks, how do we get on the offense? How do we take the fight to them? What small concept can we start and build into a force?
Well, I mean, from the standpoint in America, I think people need to lobby their elected representatives, and people need to tell their elected representatives that what they see coming is unacceptable, and that if they pursue or continue along this path, that they're all going to be thrown out or not reelected, and they're going to be jobless. And that's, I mean, we still to a point have the power of the ballot box, and hopefully America has a presidential election next year. And I mean, if Trump is impeached, and if Pence is impeached with him, and and God help us all, if Hillary Clinton becomes president, maybe the elections will just be canceled. I mean, I don't know. I really don't know. I put nothing past Hillary Clinton. Hillary Clinton is the is an evil human being, but a despicable example of whatever it is she is.
Back to the potential for a abrupt change in the civility or constitutionality of our society. Ernst Eck asks, I believe that a global cashless digital dictatorship will be the end of privacy, freedom of speech, and action. Is there any way to stop them from turning us into cashless cattle?
Good question. And I don't believe I really know the true answer to that. But let's put it this way. I think at the end of the day, with what is surely coming, people who own physical metal will fare better than virtually everybody. So what's coming isn't going to be pleasant for anyone, but you're going to have a leg up if you have physical precious metal, if you've done some prepping, if you have some storable food, if you have a means to defend what you have, and you're going to be in better stead than those who haven't. So, but whether or not we're going to be able to avoid having digital money, I wouldn't bet a whole lot of money that it doesn't get to that. So may very well end up that way. But you're still going to be better off than those who haven't if you own some physical precious metal. End of story.
Related question from Bald Wombat. Rob, do you think that gold and or silver will be the subject of confiscation or made illegal to hold in the coming crisis, at least in some countries?
America has a precedent for confiscating metal. Canada does not. I don't believe it's highly practical for governments to confiscate metal from citizenry. But what I could see happening is that all the mines might very well be told that they're going to sell their offtake to the government when the government needs to recapitalize itself. I think that's probably a more likely outcome than the citizenry being basically ripped off of their physical holdings.
We have one to kind of end on a lighter note. Stark Side of the Moon says, just sharing this with you guys for a laugh. The Australian Office of Financial Management has stated at the bottom of their latest Treasury note tender announcement, quote, today's result is in no way a default by the Commonwealth of Australia, unquote. So it looks like...
There you go. I mean, that just about says it all. G'day, mate.
Rob, if people want to find out more of your work, where can they find you?
You can catch me on the web at kirbyanalytics.com.
Before we let you go, can you stick around for another bonus question for our Patreon subscribers?
Sure, why not?
And folks, if you're not already a patron and a sponsor of our channel, you can become one very easily by going to patreon.com/reluctantpreppers and pledge any amount. You get access to extra bonus material from Rob Kirby and many of our other guests as well. Rob, as always, thanks for joining us on Reluctant Preppers. And before we let everybody go, I'll read the bonus question so they know what they're going to be missing here. BKBK asks, do you ever get out and do some nugget hunting? So we're going to let you go before you get a chance to answer that, and we'll see you next time on Reluctant Preppers and financialliberty.com.
It seems so hard to order. Who can I trust, and how do I even start?
Oh, you just go to sdbullion.com/rp, pick out whatever gold or silver you want, add it to your cart, you can check out, and it's on its way. And they're A+ rated by the Better Business Bureau.
Wow, it's that easy?
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/rp. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions.